Thank you, Ian, and the team for having us host this event this week again. So we're very interested in this topic to talk about RegTech today. To hopefully have a good discussion about all the issues in relating to RegTech. But we're very happy to have you here at our new offices here in Edinburgh. So we came to these offices in January this year. It'd been, I think, for quite some time there'd been issues during COVID, but so we're very happy to be in these new offices and have you here, and hope you're enjoying the view as we have our discussion today. So talking about RegTech today, so the question is, where is the RegTech market? What's happening? What changes have been made? Financial crime isn't going away. Data security continues to be an issue across the whole sector. But the waves and waves of regulation continue to come. So it's affecting businesses, all financial institutions, all financial services businesses, how to deal with all of these issues at the moment. And then on top of that, of course, we've got Brexit, and we're beginning to see what the meaning of Brexit is in a technical sense, with the changes that are coming, and EU retained law to be changed into new legal mandates. So there's a lot of change taking place at the moment. So today really the discussion will be a bit about what's the state of the market at the moment. What can RegTech solutions offer? How has it developed over the last few years, and what opportunity really is there going forward for RegTech businesses generally, and also for financial institutions to collaborate as well. So we have a large panel of 5 gathered here today. So perhaps, Nicola, if you want to introduce yourself, we'll have the panelists introduce themselves first, and then we'll start our discussion.
Great, thanks very much. Thanks, Luke. Good evening, everyone. I'm Nicola Anderson. I'm the Chief Exec at FinTech Scotland. And FinTech Scotland is absolutely privileged to be involved in the FinTech Scotland cluster, as we are in the thick of the financial crisis, I nearly said. That's another topic. As we are in the thick of the FinTech Scotland Festival at the moment. So we're a cluster management organisation. We're here to support you all as you think about that opportunity that FinTech presents, as we think about this important question: what should the future of finance look like? Before I joined FinTech Scotland, I worked at the Financial Conduct Authority. So as we talk about this topic today, and anybody that's heard me speak over the last few weeks or even months or maybe years in particular will know that this is a topic that's close to my heart, and I think a real opportunity as we consider what is the market opportunity for RegTech in the financial services sector. So it's a pleasure to be here.
Great.
Hi, I'm Devraj. I'm a finance academic at Stratweb. The reason I'm sort of here is because I convene a RegTech forum. So this is an online demand-led, knowledge-based innovation network. And it really grew from discussions with Nicola. So the Khalifa report identified RegTech as an area of strength for Scotland. And so we had these discussions about how we might best try to develop the RegTech ecosystem. And the RegTech forum really grew out of that. So actually everybody here is a participant. So, they might share their views on that. So it's really a sort of attempt to bring people together. And, the RegTech market opportunity that Luke talks about is reducing the barriers to RegTech adoption and allowing innovators to kind of market their products to large financial services organizations. And there are a number of barriers. So for example, there are reports out there talking about that. And then we're trying to sort of help in any way we can, particularly in a Scottish context, but we've also got an international angle to what we do.
Okay. My name is Gordon McHarg. I'm Chief Exec and founder of Autorec. We're a business based out of Glasgow, so somewhat atypical fintech in that we're 27 years old, so founded in 1994. We've grown out of our Glasgow base. We've got our development offices in Edinburgh, and we had, up until just pre-COVID, a sales office in London. We still don't have one, and you probably understand why. But in truth, when we set up the business, it wasn't a fintech. Obviously, you didn't even use that language. You didn't use the language of RegTech. And I guess in our business, we evolved from the regulatory side of things. So with the financial crash, the actual financial crash, 2007, 2008, the regulation that followed that created the demand and encouraged, forced many of the financial services businesses to really look at the governance and diligence around their data. And that's where we particularly grew our business into, at that time, CAS, or client money protection. And it evolved from that. And what I've seen in those organisations that we've worked with, so we have 100 financial services clients across the UK. And what I've seen in most of those organisations is the legacy systems, the difficulty that these clients and these organisations have with data. In 1998, we actually evolved some of the software that we still use, some of the algorithms in today. But I founded a business with 2 other software engineers, and we absolutely expected technology to make reconciliations obsolete. So we didn't take it to market until about 2005, 2006, when by that time we got enough experience to realise that financial services, well, you might think everything's modern and up to date. It's just not. And the back end, the back office of financial services is the critical issue as far as regulatory data is concerned. So that's the field that we operate in. You can tell I'm Scottish, right? I'm from Glasgow. I'm particularly keen in developing that from within Scotland in terms of how do we help, obviously my own business, but also the other businesses that are in the Scottish community, and how do we really build the IP and retain some of that IP if we can within our own economy. That would be good to see.
Good afternoon. I'm Mick O'Connor. I'm the founder of Yellow Consulting. When I'm not doing this, I lead the development of Prestwick Spaceport that I may touch on a bit later on. My particular interest from a RegTech perspective is complexity and the early identification of anomalous conditions. And really what I'm focused on is how do we shorten the decision cycle between detection and response to then limit the exposure to risk. And probably like most of us, I was thinking about fretting over RegTech before probably RegTech was a thing. So back in 2005, I ran a missile test range, and I had a very bad experience where we fell on the wrong side of compliance. And probably like many organisations, we were having fun with Excel spreadsheets to try and manage compliance. And we thought we were compliant, and in reality, we weren't. There was bad stuff going on, and we couldn't see it, we couldn't smell it, we couldn't touch it. So back then I thought, I'm going to find a better way to do this than Excel. And that took me on a bit of a meandering journey. So in 2016, I started Halo. That was a consultancy company. I developed a GRC framework, worked with some big clients. They loved it, gave me fantastic testimonials. I thought, I'm away. This is great. I can now start to build a consultancy company. And then one of the clients in 2017 says, this is great, we love it. Are you now going to go and develop software? Now in 2017, I could hardly spell software. I'm not a software guy. I'll build you a warship. I'll test a missile. I can't develop software. But I'm an engineer, and I thought, I'll go away and have a think as what's the problem I'm trying to solve, built an architecture around it, and then get some clever people to code it. And then I was away. So that took me on the software journey that I continue to be on to this day.
Hi everyone, I'm Yvonne Dunn from Pinsent Masons. I am a technology lawyer, and my focus is in financial services. So FinTech is obviously a big part of that as well. A lot of my work is advising more established financial institutions on their technology and their compliance solutions, but also quite a lot of collaboration between them and FinTechs. And I think that because what we do requires that regulatory compliance, and we see some of the struggles that go on to try and achieve it, and obviously the consequences when they don't achieve compliance, we're really interested and passionate about what RegTech can do to contribute to that, to make it easier for our clients as well. So really interested in this topic, and keen to get started.
Excellent. Good. So we've mentioned a few of the drivers of growth there. I think, Gordon, you mentioned the financial crisis and Mick talking about data and technology generally. But a starting point really for us maybe is to define RegTech and the different ways in which we can define it. So Yvonne, have you got views on how would you define RegTech?
Yeah, I mean, I'd probably go back to Nicola's old shop for good definitions around RegTech, but I mean, the FCA looks at it as using technology to facilitate compliance, and I think that facilitate word is important, because by facilitate, what we're talking about really is making it easier, obviously, but also trying to make sure that you are making what the results accurate, and hopefully also generating value for money along the way. So I guess it's all about that facilitation. And I think, as you say, just touching on the drivers, you've alluded to this actually, just the sheer volume of regulation that we have seen coming towards financial businesses in all areas, even just in our area of outsourcing and tech procurement. We've had multiple rule sets landing requiring compliance, so that the more surface area that you have, the more opportunity there is for gaps to open up in that surface area, and so compliance comes to the fore. We've also seen, I think, the regulators starting to toughen up their stance. They were never relaxed, obviously, they're regulators, but COVID created a set of circumstances where there had to be a bit of loosening of things in order to allow everybody to continue to function. And I think we're starting to see that being reined back in. Lots of new regulation around consumer duty, for example, that our clients are grappling with. So there's definitely that. And then just one quick thing I was going to say, those sound sort of negative. They're certainly more challenging. But I suppose the positive driver for RegTech would be that it could open up opportunities to use data in more interesting, innovative ways. Financial institutions often sit on very large lakes of data and struggle to make use of that in strategic ways. And so there's a real opportunity there. So as well as, addressing the compliance issues, also thinking about the opportunities perhaps could be a driver.
Yeah. And Devraj, the RegTech Forum, is that a similar scope? That's what you're looking at, or is it there are other aspects to it?
Well, it sort of pick up on what Yvonne was saying. So maybe if you define RegTech as using data and technology to do compliance cheaper, faster, better. So there are sort of two aspects to this. One is the sort of business optimization thing that Yvonne started with, which is basically cheaper, faster, better. But there's also the business development side, which is, for example, if something is in fact compliant by design, then wouldn't that be a sort of marketing tool? Wouldn't that be something that consumers would want to buy? So sort of two sides to it. One is to use that data, all the stuff that's locked up, and sort of unlock that data to understand, say, segment consumer markets better, to design better products, and then ensure that these are in fact compliant by design. And then there's a forward-looking aspect to it in areas, for example, like crypto, which is what is the shape of regulation even going to be? So then there's some anticipatory stuff, and the sort of thing we're trying to do in the forum, and these are grand ambitions, is to try to create the sort of framework conditions to bring people together from all the different disciplines that feed into this in order to enable this. Ultimately, you want better products, right? That are in fact compliant, and you want them produced as cheaply and efficiently as possible. And that's going to be a fairly large undertaking.
Yeah, interesting. And Gordon, Mick, Yvonne mentioned it, but the pandemic trends, the shift towards digital, the shift towards technology, is that also a driver, would you say, at the moment?
Yeah, I think, certainly there's a cheaper, faster, better. I think the resiliency is the other kind of key factor that's, certainly from the FCA's perspective, I think that was the main challenge during the pandemic, is how resilient are these financial services businesses. And there's a number of ways of looking at that in terms of the dependence they have on key individuals, the dependence they have on key systems. So with legacy systems, that's obviously much harder to maintain, whereas if you've got cloud-based platforms, so in a way, yes, that has developed that kind of need and desire to move to modern technologies, and in that transition, hopefully we'll see less Excel spreadsheets. But just caution that I was talking about Excel spreadsheets back in 2000 and 2001 and 2002, and have been almost every year since then. So we kind of got to be realistic. We still have clients who send PDF documents between each other for statements, financial statements, rather than more structured data files. So the industry does take its time to move. The other thing that has to be considered is that a lot of financial firms outsource operations now, and the resiliency and the oversight that's required on those operations is ultimately data, and it's how we make decisions on that data. So there's a number of aspects that COVID impacts.
Yeah, and there's a whole raft of issues with that model as well. Yeah, and so Nicola, is this consistent with what you're seeing from across the fintech community? This is, the opportunity, and this is where the market is, what we've sort of discussed so far.
Yeah, I think we've just scratched the surface, to be honest. And even then, I think it's just one little scratch, to be perfectly honest. When we did the research behind the R&I roadmap that was published in March this year, it was very clear from industry engagement there were 3 component parts where we thought about the application of technology for innovation and financial regulation, which in essence is what we're talking. It moves us beyond this topic of RegTech. It's actually innovation in financial regulation. And that was very clear from the discussions and the input that we had from industry and the capabilities in the fintech community. So there's absolutely a pillar around simplifying compliance. The cost of compliance at the moment, just in the retail banking market, is staggering. Gordon will probably have a much better idea, but figures in the billions on an annual basis is just staggering. And so the cost of not complying could be even bigger with regulatory fines and all of that kind of stuff. So if we can use technology in a way to help reduce that burden, that regulatory burden, which the FCA talks about very openly, then I think we'll have an opportunity to really start to think about what are the investment opportunities that we can then really consider as we think about the future of finance. So that was one area. The second area, technologies are developing so much that we can now start to think about the risk environment differently. How do we assess and measure risk? How do we move from a rear view mirror of risk, which is what we've been doing so far, to actually a more proactive opportunity through technology to address risk? So there was a huge appetite from the industry on technology to address risk differently. And that, and again, starts to help us think about all sorts of things from capital requirements, liquidity. We start to get into that really interesting space of technology application and RegTech in prudential regulation. We haven't, I don't think, scratched the surface there yet either. And then the final area that we heard loud and clear in that research was supervision tech policy. What do the policies of the future need to look like as our consumers and as individuals start to demand things in a different way? And regulation struggles to keep up with the advances in technology. So there was a demand generally for more focus and more thought on that. So, I think we have a real breadth of opportunity, certainly at our feet here in Scotland, with the experience that we have in the financial services sector, the experience that we have in our innovators, and the experience that we have in our professional and academic circles, to lean into this and to think, well, do we want to lead this? Yep, let's crack on.
Yeah, interesting. I'll come to a question that we've got from the audience at the moment. But just on that point, Nicola, around talking about RegTech versus talking about innovation in financial regulation, do you think it's helpful? I mean, for funding, I suppose it's helpful that we keep talking about RegTech.
So I think it's a term that's becoming more and more common, and I absolutely do think it's really useful to keep the topic of RegTech on the table, because what it allows us to do is think about the cross-sectoral opportunity for RegTech and how we can learn from other industries that equally have a compliance burden. So what can we learn from the oil and gas sector, the health sector, the manufacturing sector, where they're applying tech in different ways to meet their compliance obligations? So yeah, I think that's a very fair question. Look, that term RegTech is really vital.
Yeah, public sector, or maybe not.
Yeah.
So I'll come back to the first question, because we're going to consider that in some detail around the blockers and the barriers. But so just looking at that second one there, so few organisations turn compliance with many regs into a USP and marketing sales opportunity. That's true. Clear lack of understanding of the asset they have in their data. Yeah, so that's an interesting point, isn't it, around making it a USP, really thinking about compliance, the competitive advantage that can come out of that. Any thoughts on that one?
Well, for me, the data in a lot of organisations is too siloed in order to get that holistic view. So it is difficult for in particular operational individuals in an organisation to grasp that. It's just too broad. So the first challenge they've got is understanding what data they actually have. I don't think they do appreciate that at all. Yeah. And until they resolve that, it's going to be difficult for any one function within one of these organisations or any individual in those organisations to resolve those problems. But
I think it's a strategic
unlikely
point, isn't it, though, Gordon, about turning the conversation about data from data as being something to be scared about and a compliance problem and a challenge and everything. And all those things have to be dealt with, but actually data as an asset and data as something that you can do valuable stuff with. And I think it's moving that conversation on into that brings it to the table. It's brought to the boardroom table as a compliance problem at the moment. It should be at the boardroom table as a strategic conversation.
Yeah, I mean, I think that point on USP is an interesting one. There aren't many financial services companies who see compliance as a USP, and I think that's realistic. I think, and again, a little story. A number of years ago, when the CAS or the Client Money Protection Regulations came out, there was a document published with the FCA PS 14.9, famously called, which is all about client money regulation. And there were a number of fines, large organisations, Bank of New York, Barclays, and so on, various fines. They were in the public domain. I did go to a client, however, and I was talking about these fines, and he said, "Well, it doesn't matter about fines anymore because everybody gets them." Right. What's interesting now is the individual responsibility. So the SMCR regulation makes that an individual responsibility. So legitimately, if you're working in compliance, you're working in these ops functions, you can legitimately go to the board and say, "Do you know what? Best practice is we use tools. We remove Excel from our process and best practice." And given that you ultimately, as an individual, can get fined and indeed banned from the industry. It gives you that incentive to actually go to the market. So I think that's
interesting. So I guess that brings us back to the topic of simplifying compliance. So one, we need to simplify data, but two, simplifying compliance more broadly. So if we just take it back a step then, Yvonne, just thinking about why is financial regulation so complicated? Why is it so complex? And how can we build a better path towards simplification?
Why is it so hard? I think compliance can be hard for some financial institutions because there is a challenge around identifying what rule sets they should be complying with. We come up against this quite a lot when we're looking at certain, and rule sets. And there's two angles. Well, there's probably more than two, but we'll go with two angles to that. One is, what type of business am I for the purposes of the rules? Therefore, what rules do I need to tick off? And then where am I operating geographically? So there's kind of 3D chess game to be played there, and that makes it hard. We've talked about legacy technology, and we'll probably talk about that quite a lot. That definitely makes it difficult as well. The issues about siloed data and things that have been talked about. And I guess, what makes it hard is, I think I would posit, is that what makes it hard is that the consequences of getting it wrong are so serious and so scary, and the margin of failure is negligible, if anything. It's not, the same as other industries where you can kind of fail fast and everybody thinks it's cool. Financial sector doesn't allow for that kind of failure. So that also makes it hard because you're walking a bit of a tightrope when you're doing these things. Yeah. So I think that's a factor.
Yeah, interesting. Yeah. Other thoughts on that?
Yeah, I think that the relationship with compliance, fundamentally needs to change. And from an engineering perspective, there's a time when with TQM and total quality management and we can't inspect quality in, you build quality in. And I think we need to get to a place where we're not trying to inspect compliance in. So to me, doing good business, having good stewardship of your business, compliance then becomes a byproduct because you're doing what you need to be doing. And I think, we've all seen it. Fun with Excel is, auditors turn up. We know when the auditors turn up, you shine your shoes. They get a view of what the business is like at that point in time, and it's not representative of what the business looks like the other 364 days of the year. So to me, I think it's how do we get to a point where the way in which we just do good business, compliance just becomes an afterthought because we're doing it just as part of how we do our business. And that's not just, I think, specific to the financial sector. I would say every industry is in almost that same position.
Yeah, interesting. Yeah.
I would also say, like, why is it so hard? Actually, it's complex. The financial services industry is really complex. And with complexity then comes that kind of difficulty. And so, which is why that word simplifying was there. And how can we use technologies that are emerging and developing to help us get kind of unpack that complexity, get a more simplistic view on things, and allow that to progress. But I don't think we'll ever get beyond the fact that as we know and understand financial services products today, if they continue to remain the same, then we will continue to have that kind of complexity. We have innovation and technology that can help us start to shape new, different, emerging products and services. But that brings its own complexity where you're running one type of product as you're developing another. But yeah, the complexity of the landscape, I think, is just the reality of where we are.
Yeah. So with that backdrop, I guess that brings us to that first question there. So if the implementation, the development challenges for RegTech, so what do you see as some of the biggest barriers to RegTech adoption within the financial institutions, I guess that question is?
I think behaviour. I think culture. I think culture's a bit of a glib term. It's almost like it's culture, but it's ultimately about behaviours. And I think where organisations struggle, and I think whether it's regulators, whether it's the board of directors, whether it's shareholders, we've got a desire for efficacy. We want to deliver that, and and if you tell me I can't, I'm going to plug my ears, and we need to deliver it. And to me, the environment we operate in is a continual state of change, a continual state of flux. And what we try to do is create structures, silos, ways of working that are very static and very rigid when the world is quite dynamic. And all that does is introduce variety into the ecosystem. And if the organisation can't contend with that, then potentially it can fail catastrophically. So to me, I think it's that transparency, democratisation, but that awareness where if there's something going on that's not good, we talk about it openly and we address it and deal with it. At the moment, I think we've still got our hands over our ears.
I think there's a capacity for change challenge in financial services at the moment as well. There's a distinct shortage of skilled individuals that can manage change, particularly in the larger institutions. And RegTech, you probably say on the regulatory side, hasn't really been the focus. Digitisation at the front end, onboarding of customers, accelerating the kind of acquisition, if you like, of new business, that's been the priority. And where we have that skills shortage, in theory, the RegTech automates that and takes the need, but the change programme required to achieve that in the larger organisations is significant, and there's not necessarily the appetite for that. So that is one of the challenges. I think the current economic environment is an interesting one on top of COVID, because ultimately onboarding new clients is going to be less of a focus, and cost reduction, efficiency and optimization. And every single financial services company since 2007, 2008 has seen a significant increase in compliance cost. Up until now, the market's probably supported, more than supported actually, the corresponding, because we did so well, it supported that corresponding cost, but now efficiency is going to be very important. And taking skilled individuals out of the process, I think that's probably one of the key things. It's extremely difficult. Salary inflation, just economic inflation is tough, But salary inflation in tech sector is extreme, and the cost base therefore in these operations is significant. And I think that will be one of the fundamental operational drivers for financial services, at least for the next 2 or 3 years, given the current economy. Unless something magic happens on, which is not likely. Don't hold your breath.
I think as well, you've mentioned it already, Gordon, it's the legacy systems, the complexity in the systems within the large financial services institutions that, those are, it comes back to that point about change management, and it comes back to that point about where is the data, and then it comes back to the potential for risk. If you don't get your compliance correct, what's the consequences? So that then ties back into that kind of cultural point. And the regulator, I think, has a role to play in that. But I, in saying that, I do think we are fairly lucky within the UK that we have a regulatory environment that is open to trying to progress this. So that's less of a barrier. But it's the legacy systems and the issues. And perhaps that mindset of some of our risk and compliance colleagues.
I guess another related barrier, though, is that can arise is when you look at what to do about it and who to engage with as a large financial institution. There can still, we can maybe come on to this, but the fear factor of engaging with smaller entities, the risk that's perceived to be, if that's the option versus the kind of sticking plaster solution that's working okay, that's a leap of faith maybe to deal with someone that looks a bit untested or newer, despite maybe their product looking really whizzy and interesting. So there's a sort of balance of risk conversation.
Yeah, and I guess that fits in with that question. So what are some of those considerations that a fintech or a financial institution should take when deciding whether RegTech solution or regulatory compliance should stay in-house, or if you're going to use a third-party service? I suppose at the contracting stage, there's some considerations to take into account there. And Yvonne, if you've got comments on that?
Yeah, there's some sort of what we would say is basic considerations, like you need to do it in a regulatory compliant way. So if you're deciding to engage with a third party, surprise, surprise, there's a bunch of regulation that you need to think about when you do that. So that's going to be a factor, and that will drive the contracting. But there's also a risk element to it as well, depending on who you're dealing with. We have a lot of conversations about some of the challenges that there are when fintechs and more established financial institutions are engaging with one another, and there will be faults on both sides of that conversation if you look at it negatively. But I think one of the challenges that people face is trying, I would argue, is they try to do too much at once with some change projects, and that increases the perception of risk. So, and what I mean by that is that if you're looking at engaging in a change project in this context, then we would probably advocate that it's done incrementally in terms of contracting as well as the project. So you might have a pilot phase, you might have a kind of MVP phase, you might then scale it up, and at each stage you might change the contract, because actually the balance of risk and reward shifts as it goes along. Whereas I think in the past we've kind of tried to eat the whole elephant, and that makes you put in provisions that just are too scary at a pilot stage for an early stage company to accept, and actually fairly pointless for them to accept, because if you ever tried to exercise any of them, you'd find there wasn't very much to exercise them against. So it just slows the whole thing up. So I think it's just about being smart about how you contract for some of these things, and the approach you take can sort of help maybe with that stage. Yeah,
interesting. Now we've got stuck in the challenges and the barriers, and Ian told me not to focus just on the challenge, to talk about the positive as well. So we've got a couple of positive questions here. So one, how will open data help drive RegTech adoption? So that's interesting. So is there opportunity for open data in this context? So I guess, what are we talking about there? Data sharing between banks in terms of risk, in terms of cyber.
That's come up definitely.
Yeah. So I mean, secure information sharing, of course, AML I mean, the tech sprint is just finished today, the FCA tech sprint. That was one of the use cases there, secure information sharing. So you'd need a bit more than open data there, I think, because the barriers to that are, so there are technologies that enable that. So that's, think of it more in terms of secure information sharing, but also in things like onboarding. So for example, keeping customer information that could be shared by different things. So maybe even trading, well, I don't know, platforms for this sort of thing, maybe not trading platforms, but platforms that could enable this sort of thing. So there's lots of, that's where the efficiencies come in. There's no point 10 companies having to collect exactly the same information. Could there be a platform that could securely share that information? So this is, at a more prosaic stage, important for KYC. For AML, it's vital.
Yeah.
Because that allows you to establish typologies, that could allow you to establish typologies of financial crime.
Yeah, and who should be leading that really? Is that RegTechs, is that big tech, is that universities? Who's the...
Everyone really. I mean, I don't think there could be a single thing. You've got to, I mean, ideally government, you'd say, because it has to be the entity with the most convening power, right? It's got to be
Or the
convening
market. The
Yeah.
market could lead
The
it.
market,
Yeah.
I think it's unlikely to be government, but well, we could be sitting here in 20 years talking about it if we're going to wait on the government that does it.
Yeah.
I think it has to be an innovation. Data aggregation is really what you're talking about, bringing that together.
Yeah.
Yeah, and there are a number of businesses looking at those areas, right? A number of businesses doing that. Open data, open APIs, being able to interchange data more seamlessly, more easily. I mean, all of these things will help. It's an evolution, right?
It goes back to your point about not having silos in data,
Yeah.
so it's the same point,
Yeah.
really, isn't it?
Yeah.
The less barriers and silos you have, the more likely you are to be able to drive adoption and also drive more interesting use of data.
Yeah, but I guess Yvonne,
But it comes
there's...
back to your point, I think, Yvonne, about the board conversations. What's the board's conversation on data? Because that's the starter. And recognising that there's that opportunity to do more through data. And we have the frameworks developing to allow us to do that. Open banking legislation presented a framework. Hopefully the move forward into open finance will also give us that framework that we need. And suddenly then you're starting to think, okay, well, how does that work from a compliance and a reg perspective? Well, actually, you can really be confident about affordability assessments quite quickly because you're using open banking data. You can start to detect vulnerability in customers quite quickly because you're using open banking data and you have the technologies available to do that. So the board starts to get that kind of really clear link between data strategy, the tech enabled to do that, and the outcome and the impact. And then we get into really interesting conversations about compliance being a USP, perhaps. Yeah.
Yeah, interesting. And so the second one there as well, are there any sectors outside the FS sector adopting RegTech while the FS sector can learn from? Yeah, so interesting. Anyone else doing it well?
In my experience, the reason I'm sitting here tonight is I found there is more of a pull from the financial sector for RegTech than any other sector I've talked to, because I think it's a terminology that is known and used and it's comfortable within financial services. When I've talked to the space industry, I've talked to aerospace, talked to aviation, as much as they're heavily regulated, they don't necessarily recognise the term RegTech. So it's kind of fallen on stony ground to some degree, but I think it applies equally. And that's not to say they're not doing regulatory compliance well, but I think to your point, in terms of RegTech, it's not necessarily a terminology that they're familiar with. And I know that even as part of what I've been doing in terms of me understanding the market, even talking to some people within financial services, RegTech's a new thing to them as well. Not everybody, but to some people.
Yeah.
So I think it's still a place where we're almost into that kind of innovators, early adopters would always take it anyway. So I think we're at that point, and I don't think we've got to that inflection point where then it starts to ramp up. And what I see, and where I'd like to see my business going is, working in financial services, I think there's a place there, there's a home. But once you've got it established, is then take it across other verticals. Because again, I think that will come through time. But I think there's a lack of understanding and maturity within other sectors that I've seen personally.
Interesting.
It's interesting. In the fintech community, we've seen it. What we've seen, Obashi, I think, is a really, really interesting business who have established their principles having worked in the oil and gas sector. And so, they've taken their learning from the oil and gas sector, started to think about how they're building that kind of data flow process and how that could be applied to another sector. And I think the more and more we can do that, and data allows us to open up that question. So, there's some really interesting things at the moment as we think about space innovation, space tech, and the data that we can capture through observational space capability. And, we put the sustainability agenda and the regulatory compliance around greenwashing on the table. Suddenly you have data from other sectors, data from other innovation areas that will play a really important role. So we move beyond the vertical of data and financial services that is kind of flat to a much more rich, vibrant, lively beer. Yvonne, than
No
that
flat
kind of
beer,
flat
lively
beer.
beer.
Yeah.
There we go.
Interesting. Yeah, and so I guess it fits in with AI then, thinking about the use of that data, so machine learning and what it's. So the question there is around, so what are the barriers, I suppose we can come to that, but the opportunities that machine learning is providing in terms of RegTech.
Yeah, I mean, the question's sort of driving at, I suppose, the fact that there's new regulation coming into play, isn't it, in relation to AI, and does that create barriers or opportunities? And I mean, I don't know, Luke, what you would say about this yourself, but I mean, I would say I wouldn't see it as a negative, the fact that there's regulation coming into play. I think we've all known it was coming, and I think in some ways it begins to set more of a framework for how AI is going to be used, and it answers some of the questions that people have around AI that you can kind of get off the table and start to move forward then in terms of using it. So I think, and also I suppose it helps those who are concerned from a sort of risk-averse point of view to have a clear framework for compliance, because there's a regulation they can look at and stack up against, perhaps get more comfortable with embracing some of these technologies in RegTech space.
Yeah. No, I mean, I agree in terms of accuracy of data and robustness of algorithms. Regulation starting to set standards at that level can be helpful. Yeah. I don't, Devraj, have you seen much use of machine learning from a RegTech context that's actually being effective?
Turn it on its head to Yvonne's point. So the new AI regulations seem to be trying to assess the risk of AI. Yeah. And that's kind of what RegTech tries to do. What are the risks? There are sort of multiple risks. And a lot of it comes down to, and if you take the Obashi perspective, mapping and modeling where AI is in the organization, what it's doing, what it's impacting.
Yeah.
So it really comes down to sort of mapping. And that, I think, is starting to be understood, whereas the focus on AI has been about the algorithms. Algorithms are essentially black boxes into which data goes, and outputs emerge. And those outputs are then used in other areas. And there are biases that could be built into all of that. There are risks. So there's a whole spectrum of risk here, but it basically starts with the data that you use. And then you've got to see how that sort of multiplies through the organization. That, I would say, is the classic RegTech perspective. And maybe that will sort of incorporate its way into the upcoming. I mean, there's a whole raft of initiatives out there. So it's the National AI Strategy for the UK. There's what NIST are doing with the AI regulations. So it'll be interesting to see what the shape of this will be. But I think it'll be about risk. In the use of AI across the organization and mapping that out.
I think there's going to need to be a better understanding of AI at a senior level in financial services companies. Because it is to an extent a black box, but actually when you think about the decisions you're looking potentially to derive, the exec are ultimately responsible for them. So you need to be clear, and model bias, model drift based on data sets being presented. We've already talked about the difficulty of getting good quality data, so you if you can't feed that into the engine, you're inherently creating an imbalance, and so you've got to be careful about over-promising what AI can and can't do. I think we've over the hype of that a little bit, and it's now into a much more pragmatic view of, okay, what can we actually use this for?
And we look at it from the point of view as well of starting to become an AI conversation. So,
Yeah.
but we look at it as well from the point of view of oversight. And I think what you're alluding to, Gordon, the kind of capability to exercise oversight over AI is a challenge, and even just into traditional methods of exercising oversight over a supplier, like audit rights. Having conversations about, well, in the future, actually, who are you going to send into audit? It's possibly not your traditional audit team that you would have sent in the past. Sorry, PwC, etc. But it will perhaps be different types of people that need to go in, because it's different types of stuff they need to understand and be able to exercise oversight over. So it's just looking at the sort of broader impact of how oversight might change in practice.
Yeah. I think to Devrage's point, we've talked a lot about compliance, but I think from a risk perspective and from an ML perspective, I think if we focus exclusively on compliance, we're looking at very discrete data sets. So we've got characteristics data, we take it, we churn it, we do whatever, and we get an answer. And that's fine. And as long as we can bring that data together in a coherent way and we can make sense of it, it's fine. Where I think there is a place for machine learning is using for natural language processing. So for example, if you look at, let's say, for example, your whole organisation is almost a bit of a mosaic, and you've got individual tiles that's got data, and that might be system generated data. You've got all this white space between those discrete data points. What's going on in there? Because there's probably something bad lurking in there. And I think that we've got, there's a danger we can get seduced solely by technology. I think we always need a human in the loop, or humans in the loop, I think, somewhere along the way. And I think there's human beings who are trustworthy, they're competent, they're in close proximity to what's going on, and we don't hear their voices. And I think there's an opportunity to start scraping that data and understanding the story and the meaning of the organisation. Now, we don't neglect the system-generated data, because that's really important, but if we could meld both those together, I think we'll have a more coherent understanding and a more holistic understanding of the whole organisation. And I think what that will help us to do is start to perhaps detect issues and detect risks long before they become problems.
Yeah, interesting. Yeah. One other area I wanted to talk about was supervisory tech, which you mentioned before, Nicola. And so there's a question there around, it says implementation of RegTech requires investment from regulators to share data with financial services industry. What's the regulator's view on this? I guess that question, but more so just there's a tension there, isn't there? The regulators require, in terms of regulatory reporting, regulators require data.
Yeah.
How much data they financial institutions provide, changes the balance, and there's a need for technology to make that relationship work better. I don't know if anyone's got thoughts on regulatory reporting and how we overcome the challenges.
Well, I think Autorec on regulatory reporting certainly should pick up that question.
Yeah, no,
I can pick up on supervisory tech in a minute or two.
Yeah, I mean, obviously, by comparison to like 10 years ago, the amount of data that the FCA now requests from financial services, significantly greater. But the challenge still exists across all these organisations when their reporting is getting that and aggregating that data and putting, being confident in it. And whether that's coming from, maybe operations they've outsourced or their own internal operations, getting confidence around that is a challenge, and that's where our position is making sure that the integrity of that data is more transactional than it is the kind of less structured data, in terms of the KYC requirements and so on. But I think we can only expect the regulator to ask for more data. That's definitely the trend, and we'll see just how much the MiFID II kind of a requests actually make a difference to behaviours. I'm yet to see that. We have a lot of clients obviously sending lots of data, but I've yet to see kind of that actually really impact. And ultimately it should be about impacting the industry. We're providing that they are providing lots of data, but how much is it actually impacting the operations? I've yet to see that, I think. Yeah. Why are we doing it, kind of thing? It's oversight, yes, but there's been some fines, but not by comparison to the issues that the industry has.
Yeah.
I think the FCA certainly have put this topic of supervisory tech on the table. They've opened that up for exploration. And they talk about being a data-driven regulator, so that focus on data strategy internally within that organisation at the moment is very, they've been quite transparent, I think, about their intention there. And that, opens up an opportunity for discussion, doesn't it, with markets, with industry. And there certainly has been that kind of discussion between the FCA and the PRA and some of those larger institutions in particular, so they can explore, that different approach to data. There's quite a lot in that space that needs to be considered. The kind of how data is captured in the future might look differently. How the rule book works and is digitized in the future will need to work differently. And it just presents us, I think, with a broader opportunity. And there is a question about, what data is needed and what outcomes are being driven from that. And I, as an ex-supervisor within that space, you do get a significant amount of information. You do get a significant amount of data. It is reviewed. It is scrutinized. And where we were moving to before I left was that kind of space where you were actually able to anticipate and be able to go in and have some really robust conversations with organizations. So you may not see that translate into public fines, but you could be assured that there are some robust conversations that go on behind the scenes to get that change.
Yeah, so that's really interesting. So from the regulators looking at the data and anticipating problems, to what extent are they using technology? Or to what extent are they relying on RegTech type solutions, or is there possibility to enhance that function so that they can anticipate? Do you think that's
I think
there
is absolutely that kind of opportunity to enhance it. And I think the regulator has been very open about the capability and the skills that they need within the FCA in particular. And before I left, I suppose, so, if you think about the size of the financial services industry, the FCA supervises 56,000 regulated entities, from the large banks all the way through to your vets who might offer pet insurance. So data is used to drive the proportionality, and tech is used to drive that kind of proportionality in a response. And then when you think about the number of data points that are collected, tech is also used then to start to see, is there any correlation? What might you flush through? Social media data is being used. There's more and more of those kind of, I suppose, market insights that will give you some intelligence to know that you need to act, all being captured.
Yeah, really interesting. Yeah. And I guess there's the international forums as well, so potential for data across the world to be used for those purposes. Yeah. One more question there on a different topic. So more FS firms compliance being outsourced. Who then is the customer for RegTech better? So that's an interesting thought there. Yeah.
Ultimately, firms can outsource their operations and so on, but they can't outsource the obligation to be compliant, so it resides with the organisation and the execs or senior managers in that organisation. So you can outsource the operational aspect of it, but you can't outsource the responsibility. So, and that's where oversight, RegTech that provides high quality oversight of third parties, for example, that there's opportunities there. I think in the fintech space, the early stage fintechs, one of the key things is not to try and build all this RegTech into your platform. There are platforms there that you can plug into, and API connectivity into those is important. And we talked a lot about legacy systems in financial services, established financial services businesses. I've already seen relatively young fintech businesses trying to write everything themselves, and ultimately backing up their operational processes with Excel spreadsheets. instead of putting in some technology that will stop that happening. So they'll only 5 years down the line be in the same position as some of these legacy businesses with Excel processes holding up their business. And that's when it gets into scale. That's when you get problems with scalability, because obviously in an early stage fintech, one of the key things you're looking for is scalability, scalability of operations. And then before you know it, you've got regulatory issues. And you're a fintech, right? So there's an opportunity there in those younger companies really to make sure you don't make the mistakes of some of the legacy businesses.
That's a good point. I saw a comment actually earlier on along those lines as well about it is a real opportunity to scale if you look at sort of compliance as a service type packages that you can use instead of trying to do it all yourself. So definitely want to do.
Yeah, interesting.
There's a temptation, obviously, because a lot of fintechs are software houses, right? So we can build this ourselves. Why would we pay for it? But actually, if you think about where you're going, you really need to consider using the RegTech platforms that are available.
Yeah, interesting. Good. Okay, well, so coming towards the end of our discussion now, so just if we can just think about some of the solutions that are out there at the moment. What is the most interesting developments, would you say, at the moment in RegTech? What are some of the really interesting solutions moving forward with? Who would like to put one forward?
Obviously, I'd be tempted to say obviously, I'm not going to. I'm going to mention one which I didn't know a lot about until yesterday. There's a business called FundApps, which is part of the SEP portfolio, which is also an investor in Autorac, which is very good. And they are pretty much going to market on compliance as a service and doing very well. So I would mention FundApps in terms of number of different application areas in terms for look through of fund beneficial owners and companies and so on, and KYC type capabilities. So I mentioned FundApps.
So beyond Autorac, of course, I would also mention Avini. Avini is a really interesting business using NLP, really focused on the identification of vulnerability and how then that can support better outcomes for those individuals, and has real potential and real application, recognising the consumer duty of that as that builds. So Avini is certainly one that I would put on the table.
And obviously, apart from Halo as well, I mean, I had a similar thought. I wasn't going to name a name, but I was thinking those who are operating, going back to our AI conversation, those who are operating in that AI space and crunching broad data to try and identify compliance risk, vulnerabilities, any of these areas. So looking beyond the traditional data sources that would have been used to do that. So all of that sort of genre of RegTech businesses, I think are really interesting and have got a huge amount to offer, just because we live in such a data heavy world these days. So if you're able to try and capture useful insights from that, then that is a really great area to be in, I think, from a RegTech point of view, because otherwise you're just floundering, wondering where you're going to get all that information from, and are you missing the nugget over here that actually changes your perspective on a customer, where they're sitting, consumer duty type stuff. So I think that genre, without naming any specific names.
Yeah, excellent. Good. Well, thank you all for your comments today on the panel. So as we can see, there's a lot, isn't there, in terms of what's happening in the market, in terms of the challenge still obviously remains there. The challenge isn't going to go away because it is complex, but that means there's a lot of opportunity to take some of that challenge and change things for financial institutions. So thank you all for joining us today.